My name is Brad Laddusaw, president of the California Mortgage Association. We're here in Indian Wells for the spring conference. I got Matt Burk with me here with Verivest. Matt, would you mind taking a few minutes here, introduce yourself, your firm, and some of the services you provide to your clients?
Sure. Thank you, Brad. It's a pleasure to be here. Verivest Fund Services. We are a fund advisory and administration business. We work largely with new, small, emerging, and middle market managers. Focus has been on the real estate and mortgage pool space. We do some private equity and some private credit and a little bit of VC. But basically what we are is a fund advisory administration service. We provide guidance for small and new managers to help them structure their funds properly, get them set up, get them off the ground, and our main business is doing the administration. So it's back office accounting, pooled fund accounting for the entity that is the fund itself, a lot of the investor allocations of profit and loss, preparation of material that they can provide to their CPA, auditor, tax accountant, et cetera. So it's a lot of the financial and back office work that a lot of fund managers don't love doing because they really prefer to originate, underwrite, asset manage, and raise capital.
Let's call a spade a spade. It's important to stay in your lane. And as a recovering auditor, CPA, we had a couple of calls before this. We got to sit down and jump on the camera. So I appreciate you agreeing to do this with me. So
my pleasure.
A little bit about your background and your history. When did you found and start Verivest, and what was the deciding factor to launch?
Well, I come from the fund management space, so I've been a fund manager many times over. I started that in the late 90s. Started my first fund in about 2000, ran a number of them, and coming out of the Great Recession in the 08 to 10, 11 period, we were winding our then largest fund down, and I had a number of people, real estate guys, mortgage guys asking me, hey Matt, I know you've run some funds, and I'm thinking about setting up a fund. What do you think of this? And what do you think of that?
Where do I start?
And the more that we looked at that, the more we felt like there's a market here for us, from a manager's perspective, to be able to help people put all of the pieces together and successfully get it off the ground. And ultimately, so we started an advisory practice. We help people get them set up. We work with various fund formation lawyers to do the legal work, and we provide a business manager-centric approach to how to set it up properly. And that's really what gave rise to the administration business. Is then once people get going, now they sit there and go, well, how do I account for this? How do I allocate the income? How do I, and they don't really want to do that. A lot of times, especially newer, smaller managers, they don't have the infrastructure, the people to be able to do that. So we started doing the admin, and it kind of grew from there. So I've gone from being a fund manager myself to being in the fund advisory and admin space where we're providing services to other managers around the country.
It's like I think you speak the language as well, and you understand the pain points that there are in managing.
Intimately, there are many.
And I joke around because there's a lot of great funds out there, small and large, but the joke I have had the last year, it's like fund managers have been reproducing like rabbits over the last 24 months because it's the raising the capital hasn't really been a challenge. It's been quality a deal, and you have, I feel, some that feel they understand the accounting aspect or what goes into it behind the scenes, but it's a lot more than just doing fund accounting. What's some of the other services you guys offer kind of on the front end, on potentially helping them onboard investors? Is that part of your platform?
Yes, because
jump into that a little bit.
As you're well aware, there's a lot of compliance in running a fund, depending on what type of fund you're running. Reg D, is it a 506C, a 506B, is it a Reg A+, is it a Reg CF? There's a lot of different private funds, all of which have various criteria that you need to be compliant with. So we do offer AML, KYC, accreditation services, investor support services, basically.
And what's the AML, KYC? What is
AML is anti-money laundering requirements, especially if you're dealing with foreign investors. KYC is know your customer. Accreditation standards, if you're coming into a 506C Reg D fund, the investor has to be accredited, and the burden of proof is upon the manager to prove that they're accredited. So we help with all of those things.
On the accreditation side, I mean, we touched on this on our call. Technology has changed a lot over the last 15 years, last 2 years. In the past, when you were running your funds in the 90s, early 2000s, how did you verify accreditation there, and how has it changed as of 2020?
Well, back then you didn't need to verify the accreditation. You were able to accept the representation of the investor that they were accredited. But it was 2013 that the Jobs Act passed, and that's when they started allowing general solicitation and advertising. So from 1940 to 2013, you couldn't, if you had a private fund, you could not advertise, you could not solicit, you could not publicly go out there.
No matter what filing.
It didn't. There was no such thing as a 506c. That was created in 2013. So when I was doing it in 99, 2000, all the way up until 2013, it was all what is now a 506b, which means you had to have a prior business relationship with the investor, and it allowed you to take in a limited number of non-accredited investors, but there was no requirement for the manager to verify the accreditation. It was only a box on the form that the investor self-attestation. That's exactly right. So that only came about in 2013. Since then, there's been a bunch of services that have come up where people will verify the accreditation on behalf of the manager and so forth. Technology's come around, but that varies dramatically depending on what type of an investor it is. Right? If they come in through an IRA, through a trust, if there's multiple layers of the trust, if it's an LLC, et cetera, so it varies. But the SEC has a safe harbor, and that's all fairly well known. But it's a service we provide on behalf of managers if they're using us for the admin.
Yeah, and then 2013 with the Jobs Act, is that when Reg A came to light and kind of opening up the floodgates to raising smaller allocations up to as small as 5,000?
Yeah, and I don't remember exactly when Reg A came out. I don't know that was part of the Jobs Act necessarily, but certainly that was the time when you started seeing the floodgates open on crowdfunding, right? And a bunch of these crowdfunding sites came out, a lot of which are not around anymore, early adopters, et cetera. So yeah, I would say that it's been an interesting 10 years in terms of I would say there's been a move toward smaller investors being able to participate in private offerings, although that has waxed and waned a little bit, and there's not a lot of clarity. And now you've got the whole crypto thing coming out and tokenization. That's a whole other topic that is coming down the pike. The digitization of are they securities, are they not? The SEC has not been clear about that.
Yeah, let's raise $500 billion and work in the gray, because we're not quite sure how we're going to.
Yeah, but crypto is a real thing, right? And decentralized finance and the digitization of all this stuff, and I think it's coming, and it will be more and more prevalent in the coming years. But it's still very, very new, and especially with real-world assets like real estate. Tokenizing that stuff is extremely expensive still, but as that cost comes down, I could see more and more of this happening.
Let's dive into that a little bit. This was not part of the planned conversation, which is the beauty of doing these sit-downs.
Yeah,
I feel in a lot of it, and I understand crypto enough to hurt myself. Don't invest in it, but from talking to the guys that know and gals that know their stuff in the crypto, there's a misconception that blockchain is crypto, but crypto leverages blockchain.
That's correct.
And it's the blockchain technology that I think you're alluding to that is going to be coming very quickly and implemented within real estate. Is that how you see it in the tokenization of deals? Can you touch on that?
Yeah, and let me also disclaim deep knowledge of the space.
We are not advisors. We're not your attorney.
I have a working knowledge of it as it pertains to the direction that I think the market is heading for people that are running private real estate funds, and even all the way down to individual assets at some point. But the short answer is that yes, even today, non-crypto stuff or non-digital assets are mostly done digitally, right? All the technology that's out there today, somebody wants to invest in a fund, it's on, here's the sign in here, click here, DocuSign, it's all digital. So what does somebody own? They own a fractional interest of a pooled investment fund memorialized by a signed operating agreement, right, that says that they own this information. So it's not a big leap to say that all you're going to do now is make this a digitized offering that then becomes something that the investor owns a token that represents that unit. So it's the same unit, it's the same economics, it's the same thing that they have already. It just allows them to have it be held in digital format, right, through decentralized protocols, which is the way that the world is going. So to me, it allows, there's advantages in the long run to both the investor and the manager in terms of, from a manager standpoint, it's accessing a whole new investor base of people who are way more comfortable with decentralized finance than they are with traditional finance, and eventually it allows the investor to be able to trade that token, right, and have more liquidity than they have today. That's not there yet today.
Yeah, but it's coming.
But it is coming in my estimation. So I feel like people that, there's a fine line between being at the bleeding edge, right, and being at something that is coming down the pike and just being aware of what's happening. So I'm trying to be, and look, and I've made this mistake before, Brad, where I've tried to be too far out because you can see it coming, right? You know it's coming, right? With technology, you knew it was coming, right? But you can easily get too far out over your skis. So I mean, the main point I'm making right now is I believe that the tokenization, the digitization of the representation of what they own, which is a membership interest in a entity that owns a bunch of assets, right? They own a private fund. Is going to be represented in digital format that will provide advantages to both the manager and the investor over time.
And it's going to create a massive amount of liquidity in a normal, historically illiquid investment class. Not overnight, but once it starts going, it needs to be adopted. And I think you have a lot of high net worth individuals, generational wealth that hear blockchain, and they immediately think of crypto, and it's like, I'm not going to touch it because we're going to lose it. And I think it's.
But those people are aging out, right? And exactly. as a whole new generation comes up, who was born and lives in this world. I mean, like I look at my kids right now; they're super comfortable going online and having their account there and moving stuff around, and that's all they know.
Well, and you make a great point on that. I mean, and I think this put the whole country on notice that the runs on the banks we had a couple years ago. Was it beginning of 2022?
It was 23, I think.
Yeah, 23, and how quickly you could clear out your account from your phone. And that was an information across, we're touching social media, LinkedIn, Twitter, how quickly information spreads across the globe.
I know.
You could push the button and you could have a contact in Europe and say, I just saw Matt's post. I'm scared shitless, so I'm going to pull everything out.
Exactly.
And whether you're right or wrong, or you're working in the area, and I think that is something that put everything kind of on notice a little bit there. I want to pivot back to your company. Onboarding process. When do you recommend a potential client reach out to you? Is it normally before they launch the fund, after the fund, and then follow-up question to that? When do they actually reach out to you?
The answer to the latter question is all over the map. I mean, at any point along the way. It just depends. The former question, I would say, ideally, that the earlier you do it, the better, because you just build infrastructure around doing it that way. I'd say if you build infrastructure internally, it becomes harder on multiple levels to then try to interrupt that infrastructure and go outside. And the other piece is that in the world of accounting, like the more periods that go by, the more activity that you have that you later have to upload and onboard, that's one of the hardest parts, because if you've got let's say a 5-year-old fund and it has, 5 times 4 is 20 quarters worth of material and countless individual transactions, capital calls, investors that have come and gone, all of that historical information needs to be uploaded into a system. So getting that data and uploading it is hard. Like even with technology and AI, it's still very hard and time consuming, and it's expensive. So if you can start from the day you launch, that is better than if you start 2 years in, 5 years in. The longer you wait, the more expensive and time consuming it is to try to move.
And I think we're coming from the accounting side of the spectrum, where I feel a lot of small business owners and even ones that are growing extremely quickly, it's, I can handle the accounting myself. I'm making a few errors here or there. I'll catch it up on the next quarter or all that. But it's a snowball effect when it comes to accounting and accounting errors. And if you're going over multiple years and something that you thought was okay, and it's a compounding issue, and it's like, guys, this is not an okay oversight. And I think another thing to touch on as well, which I think your firm fits in nicely, is having proper separation of duties for your fund. Would you mind touching on
Sure.
On that a little bit?
And to the first point there, the manager is usually not an accountant. They're real estate people, or they're mortgage lender, private lender people, and they know underwriting, and they know asset valuation and appraisals and loan to values, but they don't necessarily know pooled fund accounting, accrual accounting versus cash accounting. I mean, I've seen plenty of deals, Brad, that came in where we get the information and it's just wrong. I mean, and then you have to clean it up, and they don't know. It's not that they're deliberately trying to do something nefarious. It's just, it's ignorance. So it's, again, the earlier you can do it, the better, the less chance you have of going down that path. To the latter point, I think there is a big advantage. In the institutional world, it's table stakes to have a fund administrator. In the retail world, with high net worth investors, it's not necessarily an absolute requirement, but it is more and more becoming something that people expect, right? If you have a third party who is looking over the financials and the books and making sure that it's all being allocated according to the way the operating agreement is written, a company that is the accountants by nature that do this, it also reduces the chances of misappropriation, fraud, other, both mistakes, honest or not. Having a third-party administrator, it doesn't eliminate, but it improves the chances of the manager doing everything properly, which engenders confidence in the investors.
And I think it's also, you highlight a very important point there. I think even passive investors that are listening in on this interview that we're having, you want to try, it's not advice, you could do what you want, but if you have someone collecting the check, posting the check, and then cutting the check disbursement on the back end, that can create the opportunity, and that's one point on the fraud triangle, and it's something to...
And they control the bank account, have access to the bank account. I mean, this gives, there's just mechanisms you can put in place that have other parties that are making sure that this is being done properly.
And then in theory, it could also be part of a company's potential disaster plan. If I'm the only check signer for a company and something happens to me, whether it's loan servicing or a third-party fund administrator looking in on the back, we need to make sure the wheels are continuously turning for our borrowers and our investors. And having that team in place gives that infrastructure without having to bring on 10, 15 people.
That's correct. There are other advantages even from a manager perspective, and this is, I get this question a lot. If a third fund administrator is typically a fund expense, so the fund is paying for the cost of the administrator, which means that cost is being borne by the investors, not by the manager. The investors might argue, well, why would I want to pay for the extra cost? Well, because you're getting the benefit of making sure it's done properly, and the protective oversight of having somebody that's involved that lessens, doesn't eliminate, but lessens the chances of mistakes, problems, challenges, theft, misappropriation, et cetera. From the manager's perspective, if they don't do it as a third-party fund admin, they try to do it internally. That cost is borne by their operating company, typically, which means from your overhead is higher at the manager's side, and you're trying to oversee functionality that generally the owner, the principals don't themselves really know how to do. So it's hard to know whether the person that you've engaged is actually doing it properly or not. And I've seen a lot of that where, we're all covered. It's like, yeah, well, you're covered by this person that's not doing it properly, but they've worked together for 2 or 3 or 5 years and they like each other, and that the owner doesn't necessarily recognize that there's an issue. So there's just multiple reasons why it makes a lot of sense, and why you see it as table stakes in the institutional world. It's getting more and more that way in the retail world with high net worth investors.
And I think the biggest takeaway I had with you with our first call, it's zero sales with you. It's here's some of the risks, here are the benefits, here's the value I feel we bring to the table. Here's something you may want to keep an eye out for.
Exactly.
How does the onboarding process work with your company? Say you and I have a call out of the conversation. What is step one for someone like myself to start the onboarding process?
If it's a brand new fund that has no historical activity and it's just getting started from scratch, it's very simple, because you're not uploading any historical data, right? And then there's a whole other topic. what technology are you using for your investor management system? That's another thing in the last 10 years. 10 years ago, there was really no technology hardly at all.
What management system?
It's Excel and my CRM and QuickBooks and
they're all on their own island.
Yeah,
like nothing's talking to each other.
So you started seeing about 2015, 16 and investment management software coming out, and there was a few, and now there's dozens.
Yeah.
So the onboarding piece, depending on what software someone is using for their investor management system, it might be a little different. We offer it's not our technology, it's a white labeled service that we have that integrates with our accounting system. So if somebody already has something, fine, we'll be happy to use that. If somebody wants to use ours, that's fine too. Again, depends on the situation. So from a onboarding perspective, if you're using our technology, we would map all the documents, create it all. It's all set up so that your investors can come in, see your deal or your fund, like poke around, have a data room, see what's going on. Oh yes, click yes, I want to invest. Click here, am I accredited, yes or no? Go through the whole process. So we map all of that stuff, get it all set up, and then you would be able to use that for your marketing to your investors and have them sign up. If you're not using that, we're mapping you into our accounting system. And again, if you're an existing fund that's been around for 2 or 3 years, it's a lot more time consuming because we have to upload and forklift all of that data into the system, make sure that it maps properly,
and hope it's all there.
Accurate. And that's a big part, is that we're relying on the manager to give us that data, which is in all manner
What happened to Q3 of 2023, boys?
Yeah.
We don't have that here.
And that delays the process, and then you have to make assumptions, which if you're dealing with various types of funds, you need to know what happened in prior periods in order to calculate waterfalls and accrued preferred returns and other things that, and again, a lot of this stuff for the manager, they don't fully understand how it works. So again, better at the, much easier at the inception if possible.
We're gonna do a complete 180. Who is Matt Burk? What do you do for fun? What makes you tick? What makes you show up to the office every day?
Yeah, I mean, well, I've been doing it for a long time, Brad, so I don't know anything else at this point. But I've got a couple of boys that are out of the house now and in college, so my wife and I are relatively new empty nesters. I ride a road bike, so I really enjoy cycling. Played basketball my whole life until I got to be about 40, and then just too many injuries, couldn't do it anymore. Took up cycling and been doing that ever since. So I love doing that. I like playing golf.
Chat about that a little bit.
Yeah. I don't play as much as I'd like, but I'm kind of a binge golfer. I mean, I'll go if I go to Bandon, I'll play 6 rounds in 3 or 4 days, but then I won't play for 2 months. So, but yeah, I mean, I enjoy doing what I do. I really enjoy helping managers that have gone through the same progression that I went through, try to avoid some of the mistakes that I've made. I mean, I'd say that's probably where I get the most enjoyment out of it, is finding people that want to grow, that are competent, capable, honest, have good business practices, know what they're doing, but need help, and they're trying to get into the fund world and they're trying to scale that. I know a lot about it, so we're able to help them, and then we help them keep their overhead down, help them raise more capital more effectively. I enjoy doing that.
And then you said relatively new empty nesters. So, and I know you've done some pretty badass golf trips. You shared, I was a little jealous on some of the trips, but if you and your wife could do a bucket list trip anywhere in the world, expenses are not an issue, what would be a bucket list trip you guys would do?
Well, we've done a fair amount of traveling over time. I wouldn't say not as much as some people, but a fair amount. Our most recent trip was to Mexico City, which was great. I really enjoyed it. Japan's high on the list at this point. Africa we have not been to yet, so there's quite a few, man. I mean, they're too numerous to mention. I don't know that there's any one that would be like our favorite trip of all time that we did was to Italy. We went to northern Italy, and
so much history out there.
We did it right after this was in 2021, right after COVID, and so it was like dead. We were in Venice, and the streets were pretty much empty, and it was unbelievable because usually they're just packed, to the gills. There was hardly any Americans there, so it was awesome. So yeah, there's a bunch of them on the list.
Good. Well, Matt, I really appreciate you coming to CMA, supporting CMA, and agreeing to sit down with with me here.
That's
for a
my
little
pleasure,
bit.
man. It's
Looking
my
forward
pleasure.
to talking
yeah.
off camera as
Thank
well.
you
So
very much.
thank
I
you.
appreciate you having
Thanks.
me.